So in this blog I'll be reviewing the closed trades since the last blog that I did. So I'll be covering trades from the 6th of March through the 23rd of April. Overall, the two algorithmic packages that we offer have done really well in 2017 so far. The swing trader's up about 34% and the S&P Crusher's up about 15%, and that's per 15K traded and per 30K traded on the Crusher. Of course, keep in mind that trading futures and options involves substantial risk of loss. It's not appropriate for everyone, and past performance is not indicative of future performance. But overall, the algorithms have done really well. Since the last blog that I did about a month and a week or two ago, they've continued to do really well even though the market has been going lower. And so I'll be showing charts of the S&P, showing how the S&P has done since the last blog, and then showing how the algorithms have done in those periods. So first I'd like to go over the standard disclaimer. Just keep in mind that Algorithmic Trading is .net is a third-party trading system developer, so we provide the license to use our algorithms. We are not registered commodity trading advisors. Just remember also that, like I mentioned, trading futures and options does involve substantial risk of loss, and that past performance is not indicative of future performance. Other than that, though, I'll be covering mostly live trades that we've seen with the algorithms, and so just keep in mind these standard disclaimers. Alright, so here is the period of January 1st, 2017 through the 23rd of April. Last time I did the blog, the equity curve ended kind of at this point right here. Since then we've had a few more trades, and now the algorithms are up about 5,235 per 15K traded, and that's a gain of about 34.9%. We've had 26 trades, 81% of those have been profitable, and our drawdown for the year has been about 1,800 per 15K traded. Has been the worst case, and that occurred kind of at the beginning of the year, right here on this part of the equity curve. If you want to see the drawdown, the entire drawdown, or all the stats since this algorithm began trading live, then refer to the website because we show that data. I'm trying to focus on these blogs, more the recent performance, and so that's why we're showing the year-to-date 2017 returns. If I go to the trade list, though, you'll see all the trades beginning in January 2017. And the last blog I did, we did cover all this, although I wanted to note a mistake we had that we fixed. So the long 10-year note trade, when we did the rollover, it had a gain of about $1,060 as opposed to $1,600, which is what we did have shown. That was a mistake that one of our customers caught, and so we've updated the trade list to reflect that. But since the last blog we did, which ended on the around the 3rd of March, I believe, we've had 4, 5, 6, 7, 8, about 9 trades. We've had a few long S&P trades, and then we got out of our 10-year note trade, which is probably one of the highlights of this algorithm. But let me go to the charts, and I'll kind of walk you through some of the trades that we saw. So if you've seen the blogs that I've been doing, or if you've been watching, following along on the website, you'll know that the swing trader trades two algorithms. It trades the momentum ES algorithm, which is the one on the left here. It also trades the 10-year note, which is the one on the right. When you combine these two algorithms, you have the swing trader package. Now, the last blog I did ended right around in here, and so before this period, the market saw a really strong rally that lasted about 3 months. And in the previous blog to this one, I covered this entire period. And you know, the swing trade ES algorithm did really well throughout that entire period, as to be expected. When the market goes higher, the momentum ES or the swing trade ES algorithm typically does really well. What recently happened, though, is the market really started going sideways for about a week or two, and then it really started selling off beginning around the 21st of March. And so since the last blog, the S&P has gone lower. We ended the blog last time around in here where the S&P was at 2378, and it closed on Friday at about 23.44. So it's been down a couple percent, the S&P that is. Now the momentum ES algorithm has done really well in that period, and you'll see that we ended up getting out of one of the trades that we were in on the 6th of March, and I believe on the last blog we were still long this trade. So we got out on the 6th of March, and then we got back in also on the 6th of March right here. We ended up getting stopped out of this trade, but then we had a, let me kind of zoom in so you can see it a little bit better. So we got stopped out of this trade, then we jumped back in and hit our target on this gap up. Then we got back in again on the 10th and hit our target on the 15th. And we jumped right back in on the 15th and got stopped out on the 20th. But then, and this is what I really wanted to highlight, you'll see as the market went lower, this algorithm performed really well. So on the 20th we got back in, we got out on the gap up on the 21st, and then you had this huge sell-off on the 21st, and we avoided losses since we got out on this gap up. And then we jumped back in on the 21st, got out on the 23rd with another gain, and then since then this algorithm was on the sideline. So throughout all of this volatility, this algorithm did the exact right thing and was on the sideline. Had we would have gotten back in on the 24th, we would have seen a loss on this gap down, and then the market would have rallied. We would have missed it. We would have seen gains, of course, on the 28th, but overall this algorithm did the exact right thing. So as the market was volatile, going kind of sideways, this algorithm was on the sideline. So what the momentum ES swing trade ES algorithm did was avoided losses. So again, as the market goes higher, as you see through this period, typically sees a lot of gains, and the real test of the algorithm is when the market goes lower, does it then give back all the gains that it saw throughout this period? And what we saw is that this algorithm did perform really well, because it actually had a few gains. Overall, the total loss since the last blog I did on this algorithm alone was only about $200, and so it held on to the gains is really the point I'm trying to make. Now the entire swing trade algorithm though has been up since the last blog, and that's really because of this 10-year note algorithm. So the last blog I did was right in here, and if you watch the blog I probably talk about how this had been going sideways, and we expected to go higher, but it's possible we would get stopped out if it went lower. But what happened is the 10-year note just really took off, and so we ended up hitting our target on the 12th of April, and so that was a really good trade. So we got in on the 6th of January and got out on the 12th of April. And because of the gains that we saw in this algorithm, the entire swing trade package was profitable for that period. And so overall it did really well. The swing trader is up since the last blog. I believe it's up about 5% on a 15K account. So overall it's done really well. Okay, now I'd like to talk about the S&P Crusher. So for the period reviewed, basically 2017, it's up about 4,678 per 30K traded, which is a gain of about 15%. It's had 83 trades, 71% of those have been profitable. The biggest drawdown for 2017 has been about 2,390, and that drawdown was also kind of at the beginning of the year, and it's right here on the equity curve. But what you'll see is that the S&P Crusher is making new highs on the equity curve, so it's done really well. Since the last blog, which I believe would have been right about in here, it's really done amazing. And so the S&P Crusher has definitely done really well since the last blog we did. Here's the trade list, and so this is starting in January through the January 1st through the 25th of January, and then here's through February 10th, and all of these trades I cover in the previous blog. And then here's the rest of the ones that were also covered in the previous blog, so I won't talk about these until we get here. So here's all the new trades since the last blog, and you'll see that it's had a decent number of trades. It's had a few swing trade ES trades, and those are the same ones that the swing trader algorithm saw. Again, this is the S&P Crusher, which trades 7 algorithms. So it trades the swing trade ES, and that's this one here that I'd been talking about. It also trades the 10-year note, which is right here, swing trade TY, which is this algorithm. So it trades the same ones that the swing trader does, but it also trades 7 other algorithms. So it trades these two, swing trade ES, swing trade TY. It also does the iron condor, the gap short, the day trade long, the day trade short, and then it also trades covered calls, which are these little lines that you see on this chart. So if I go back to the PowerPoint though, here's all the trades. So we had 1, 2, 3, 4 iron condor trades. We had a couple gap short day trades. Whoops. We also had a couple covered calls, and then the swing trade ES. So it's had and then it even had a day trade short. But let me go to the charts and we'll talk about the trades that it saw since the last blog that I did. Okay, so we already talked about the momentum ES, talked about the 10-year note, how it hit its target. The other algorithms that the S&P Crusher trades are the iron condor. So let me talk about that. The last blog I did would have ended right in here where I talked about these iron condors. Since then we had 4 other iron condor trades, and 3 of them were 100% profitable. Only one of them was took a loss, and I believe this trade was, yeah, it was a loss, but not by a lot. I mean, it kind of looks like it might have been bigger than it really was, but I'll talk about that. So the first trade we had though was on the 7th of March, or I'm sorry, on the 6th of March on a Monday. So we would have sold the 2385 and the 2370 puts, and the market closed kind of right in between these two lines, actually closer to the put, but it was still profitable because it didn't go below the put. So this first trade was profitable. The second one was also profitable. That was initiated on the 13th of March on a Monday. You can see that on Friday it closed right in between these two lines, which is what we want to see. And again, this algorithm, the iron condor, is designed to do well in sideways moving markets, and in this period of sideways / drifting lower, it was profitable. It had 3 winning trades and only 1 losing trade, which was right here. The last trade that we had was actually on last Monday, and we sold the 2330 puts and the 2360 calls. You can see that it expired on Friday right in between, so perfect trade, where we kept the premium on both of these trades. But if I go to let's see, actually a little bit later I'm going to talk in more detail about the iron condor, but for now let me keep going and let's look at the other algorithms. So the covered calls is another algorithm that the S&P Crusher trades, and it actually did 100% profitable, did really well actually. So the last blog I did would have been right in here around the 3rd of March. So on Monday, on the 6th, we sold calls against our long S&P position, and because the market sold off, we did take a loss on the long ES, but the covered calls were profitable because the calls expired worthless, and we sell those. Then on the let's see, expired on the 9th, 10th. Okay, so then on the 13th of March, we sold the 2380 calls, and those also expired worthless on the should I get it right here, on the 17th. So they expired right in here just below the 2380. So we had some gains on the long ES, took a loss on this trade on the long ES, but then the calls that we sold help offset those losses a little bit. So profitable on that trade. And then on the 20th, we sold the 2380 calls again, and those definitely expired worthless, so that was a winning trade. So that was actually a perfect week for the long S&P plus the covered calls, because we had gains on the long ES, even though we were short the calls, because by Friday the calls expired worthless. So that was a really good week. And then when the long ES algorithm quieted down, then we stopped selling calls as well. So overall, the covered calls did really well since the last blog. 3 trades, and all 3 of them were profitable. Let me talk about the day trade algorithms now, just kind of quickly, because we really didn't have a lot of trades. But if I kind of go back in time, we're looking at the gap short algorithm, and it did have a winning trade on the 10th of March. It was a decent trade. It started out better, but the market rallied towards the end of the day, and so the gain was less, but it was still a winning trade. And then on the 15th, we did have a losing trade. There it is. So we took a loss on the 15th, and I think those are the only 2 trades that the gap short had. And so so overall, the gap short was at a kind of a small loss for that period. The day trade long algorithm, let me talk about that real quickly here. So it also did not have that many trades, but it did have a few. So it had a actually, I think I need to update this. This trade looks like it was a stop at a break-even trade, so I'm gonna have to look at that and double check that is correct. But let me re-look at this. Let's look at the day trade short algorithm first. So if we look at that one, yeah, so this one had a trade on the 11th that got stopped out, or it actually exited at the close with a loss, and I believe that was the only trade it saw since the last blog, that is. Okay, so let's look at the day trade long algorithm. The reason why I was a little confused when we were looking at the chart is because it showed us getting out right here, but I had a customer ask a couple weeks ago what would happen if we got out kind of a couple hours after we got into this trade, and so I ran an experiment to see what would happen, and the profit factor is actually quite a bit worse if you do that. And so the chart was still set up with that, but this is the trade we saw on the 5th of April, and so we got in on this gap up and got stopped out right here. So this is the correct setup, but we also had a day trade on the 1st of March, which I think I talked about this one on the previous blog. So let's look at the one that we had on the 15th of March. So this was a great trade. We got in on the gap up and got out at the close with a really nice gain. So the day trade long algorithm had 2 trades since the last blog. One that was a stop out right here, and then the other one was this one here on the 15th, where we had a nice gain. So that covers the algorithms as far as the S&P Crusher on how it did. If I go back to this, yeah, so just to kind of summarize, so the S&P Crusher, it's making new highs on the equity curve. So even though the S&P is going lower, the Crusher actually gained another 5% roughly since the last blog. The swing trader also gained about another 5%, and it's also making new highs on the equity curve for 2017. So both packages are doing really well. What I'd like to talk about now is just some of the highlights of since the last blog that I did. Okay, since the last blog on the 3rd of March, the S&P has gone lower, and what I'd like to do is just quickly just show you a chart of the S&P, just a daily chart, and kind of show you what I mean. So let's do a daily chart, and we'll go back 2 years. So this is the S&P 500 daily chart. So here's the start of 2017. Here's kind of the beginning of the rally that began in November. And so if you watch the previous blog, again, you'll see me review all the trades that we saw throughout this kind of strong up-moving market. And but since the last blog on the 2nd, the market sold off, kind of went sideways, drifting lower. So that's what the S&P did. And the question is, of course, okay, so your algorithms did really well when the market was going higher. How have they done since the market went lower or sideways in the last kind of 5 weeks? And so as most of you know that have been following us, you know that our general methodology is to trade uncorrelated algorithms where one might do good when the market goes higher, kind of like this momentum ES algorithm, and then one might do well when the market goes lower, kind of like the 10-year note algorithm that trades the 10-year, which usually trades, it has a negative inverse correlation to the S&P 500. So as the S&P goes lower, the 10-year note usually will go higher. It's not always the case, but usually that is the case. So we trade multiple algorithms where the one that does good when the market goes higher, like this momentum ES algorithm, the key is you don't want it to lose a lot when the market goes sideways or lower, otherwise it just gives back all the gains. And so when I talk about the algorithms, I usually talk in terms of how did the algorithm do based on what the S&P was doing. So for example, the iron condor, we're okay if it takes losses if the market is selling off hard, and that's because it's designed to do well when the market goes sideways. So as long as it does well when the market goes sideways, then we're generally pleased. And but of course it can't lose a lot when the market goes lower, because when you combine all the algorithms together, then you have a complete system that's designed to do well no matter what the market's doing. Similar with the 10-year note, as long as it does well when the market goes lower or sideways, then we're okay if it takes some losses when the S&P goes higher, because the gains from the other algorithms in theory will be bigger than the losses that we saw on the one that's not kind of the hero algorithm. So with that in mind, I'll go over some of the highlights. So the S&P went lower since the last blog, and the S&P swing trade algorithm, the losses have been minimal. So we've only taken losses of about $210 on that one algorithm. So this is the algorithm that does well when the market goes higher, and when it goes sideways or lower, it's just designed to either have small gains or not lose a lot. And this is an example of what we consider extremely acceptable. It only lost about 210 even though the market was trending lower. If we look at the 10-year note, the market was going lower, the 10-year was rallying, and so this algorithm did well, and so it had gains of about $1,900, almost $2,000. And so if you have gains of $2,000 on one algorithm and losses of only $200 on another, then you're net up about $1,800, and that's for periods analyzed between January and April, and let's see, actually from the 6th of March. So so that's kind of how the algorithms are designed to work, and they did exactly that. And so again, these two algorithms, the S&P the ES swing trader and the 10-year note algo, those are the ones that are in the swing trader, and so when you combine them, they did really well. Also, the iron condor, which is traded in the S&P Crusher, along with those other two algorithms plus another 4, it's designed to do well when the market goes sideways, and that's exactly what it did. So we had 1, 2, 3, 4. So I have five trades since March. This first one we did cover in the previous blog, but the gains since the market has gone sideways or drifted lower have been approximately $700. And so again, this algorithm has also done really well. It really only had one losing trade, and that was from the short put that we talked about. That was the one back over here. So on this leg, on the short put, it took a loss, but it it did have gains on the short call that help offset that loss, and then the previous trades were also strongly up. So the Iron Condor also did really well. The market went sideways and it did its thing. It was up. So overall, the algorithms have done really well. They've handled the down-moving market conditions extremely well. We are up in on the S&P Crusher. We've been up every month this year. On the swing trader, the only month we were down, I believe, was we were down slightly in March, I believe, but not by much. And then April we're up so far. So overall, both algorithmic packages have done really well since the last blog. We're up another 5% on both of them. So so hopefully that answers the question, how do the algorithms do when the market goes lower? Just keep in mind that, of course, past performance is not indicative of future performance. Trading futures and options involves substantial risk of loss. It's not for everyone. But if you're looking for an automated trading system that has been trading live for quite a long time now, and you want to put some money to work in kind of these alternative investments, we believe that what we have is potentially the best thing that you'll find out there. Now, I think that covers everything. So hopefully you enjoyed going over the trades. I know this blog has been long and I kind of drone on usually, but hopefully it's been helpful. If you're considering one of the algorithms, you know, there's basically two packages that we offer. We offer the swing trader. That's the one that's up about 35% in 2017 so far. And then we offer the S&P Crusher as well. That's the one that trades 7 algorithms as opposed to 2. This package is up about 15% on a 30K account. So so they're up actually similar dollar amounts. The advantage of the swing trader, though, is it trades on, because it trades fewer number of algorithms, the unit size is 15K. But if you look at on a dollar amount, it's about 5,235 on the swing trader, 35%. If we go to the Crusher, it's up about 4,600. So it's up almost the same dollar amount, but on a percent basis, it's half that because it's a bigger unit size. Both of them, the equity curves overall look pretty good. The Crusher is making new highs, and the swing trader is as well. So I think that covers it, though. If you have any questions, just don't hesitate. Give us a call. Send us an email. I'd love to give you a live demo where I can walk you through the trades. Again, I'll just close with our disclaimer once again that it's not for everyone. So, but if you're looking for some kind of automated trading system, then I think this is one of the best that you'll find out there. It is automated, 100% automated. We have auto execution brokers that support it, multiple that you can choose from. We can also load the algorithms on TradeStation, at least for the swing trader we can. S&P Crusher, we can also load the algorithms, but the options algorithms are not automated with TradeStation. But with the auto execution brokers, they are. So it's a fully automated trading system, and I think that's it. So have a great day, and look forward to talking to you again, potentially in a week or maybe a couple weeks. I guess we'll see. But I think that covers it. So have a great day, and take care.